Mistake number 3. Using traditional banks instead of online banks. In regard to savings, this may sound crazy, but traditional brick-and-mortar banks seem to have fewer advantages than their online counterparts. And it can be costly for those folks who are barely earning enough to keep their accounts without having to pay any sort of maintenance fee because they can't always maintain a certain amount in their account. Reasons. The interest rates are pathetically low for savings accounts opened at traditional banks, ranging between 0.05% to 1% for most banks. Therefore, you don't really see any progress in your money, even after a long period of time. Added to this, it can be nerve-wracking to manage your monthly bills and at the same time keep a minimum balance in your account to avoid fees, which can be arduous if you have urgent expenses, thus restricting you in terms of withdrawal freedom. Benchmark. Try opening accounts, savings or checking, with non-mainstream online banks. Why? Well, when compared to traditional banks, which already pay low interest rates and charge high fees every time you don't meet specific requirements, here are the main perks of online banks. Most online banks, for example, Ally Bank, Ally.com, CIT Bank, CIT.com, PurePoint, PurePoint.com, American Express Bank, AmericanExpress.com/personal savings, and Discover Bank, Discover.com/online-banking, have no minimum balance requirement and no maintenance fees, while the popular big players like Chase, Bank of America, HSBC, Citibank, and Wells Fargo do. The most attractive feature of these banks is the possibility to earn on average a 2 to 3% APY on your savings account, which might encourage you to save more, since you see your efforts to save help your money grow. The reason they can afford to offer higher interest is because of the lower operational costs from not having branch locations and staffs, and lower marketing costs since fewer people hear about them. On another side note, online banks do give faster loan approval than traditional banks. Need a fast loan on a house about to be taken off the market? Online banks may be your calling card. Despite all these advantages, some people still remain hesitant about using online banks due to their lack of existing branches, which is understandable for the convenience of completing transactions with a teller. However, online banks also provide many traditional services like wire transfers, digital check deposits, which traditional banks offer through their online applications, money transfer between accounts, bill payments, sophisticated security encryption, and most important of all, FDIC insurance to protect your money up to $250,000, just like any other bank. Just ensure that the bank is listed with the Federal Deposit Insurance Corporation, https://research.fdic.gov/bank-find, and not some fake bank. The downside of online-only banks is the lack of ATMs for withdrawals, so you'll have to pay third-party ATM fees when you use one, although some online banks reimburse you for some ATM fees. So if you plan to use ATMs frequently, you may not want to abandon traditional banks completely, but instead keep one traditional account open. Task: look into opening an online bank account to help save for your future financial goals and objectives. Take note of the APY percentage you could earn after a period of time. Keep in mind that these rates do fluctuate depending on the Federal Reserve, so don't be surprised if your 3% eventually drops to 1.9%. In general, aside from some physical limitations, online banks are a monetary upgrade to brick-and-mortar banks.